The stress over those EU stress tests on banks continues. Francine Lacqua is in Frankfurt today with the IMF's John Lipsky. Francine, go ahead.
We sure are, Eric, with Mr. Lipsky, and it's all about the stress tests here in Europe, but we haven't been able to actually pinpoint exactly what the ECB thinks on these yet. We're waiting to see the results on the 23rd of July. We are very pleased to say we're joined by Mr. Lipsky. You told us last week that actually we have to make sure that these stress tests are credible in terms of the haircut for the sovereign debt. Otherwise, the markets will see it as something that hasn't worked. The numbers we have so far, 17% for Greece, 3% for Spanish bonds. This is too low, certainly.
Well, first of all, the important elements are that there's broad coverage, that seems to be the case, realistic scenarios, transparency, and the availability of remedial action for those institutions that are shown to need additional capital injections. We haven't seen the details. I suspect that there's, regardless of whatever scenario is chosen, it will be possible to say not enough. Others may say it's too much. My guess is we need a realistic scenario that provides stress. We're not trying, it shouldn't necessarily be a doomsday scenario, certainly not, but one that would provide a realistic degree of stress and then give some good insights into the underlying strength of the banking system.
Our sources have told us these figures: 17% for Spanish bonds, 3% for Spanish bonds, 17% for Greek bonds. Is that realistic?
I haven't seen any numbers. I'm sure that the stress tests that will be chosen, the scenarios, will be realistic ones and will serve the purpose.
Mr. Lipsky, in the U.S., these stress tests for the banks were a success. Markets believed in them. What happens if the markets don't believe that they're rigorous enough here in Europe?
Oh, let's take a look at what's happened. The positives are that it looks like all the preconditions that are necessary for a productive and constructive step are being filled. Broad coverage, I think realistic scenarios will find a transparency and remedial action.
Now, yesterday we also heard from the IMF that the downside risks to growth materialize. If they materialize, actually central banks will have to push more liquidity and try to deal with the scenarios with everything they have. What is there left for the Fed to do at this point?
Well, the monetary authorities, as we've seen, have got lots of tools available to them that, in the case of the Fed and other central banks, have done since 2008. Many have undertaken many steps that previously many would have thought unthinkable. But when the moment called for it, they have reacted strongly. I wouldn't assume that any central bank is anywhere close to out of ammunition.
Are you concerned, though, about the political independence of central banks such as the European Central Bank and the Fed?
No, not at all. These central banks have been acting in ways that have been unique. Of course, it has caused some surprise in some quarters, but the circumstances that they faced were unique. They responded strongly, and I think looking back, we'll see the counterfactual, if they hadn't acted, would have been much more problematic.
Now, there's a lot of talk, of course, about regulation. If the U.S. financial regulation legislation is passed in its current form, will it be enough to mitigate the risks to the financial to the U.S.?
Well, remember, the goal of regulatory reform is to strengthen the resilience of the system. As we pointed out, improved regulation is one aspect that is needed to reach this goal. Another is to strengthen supervision. It's one thing to have rules, it's another thing to make sure that those rules are adequately applied. We also think it's important that a resolution mechanism be created in finance that would further aid in creating a more resilient financial system globally.
Do we need to make sure that China is on board with more flexibility on the yuan to actually get us out of this difficult stage still in the world economy?
Well, let's look at this in a broad context. In Pittsburgh, the G20 leaders created the framework for strong, sustainable, and balanced growth to be put in place through a mutual assessment process. In Toronto, there was a review of that process. You can read the technical document that we prepared in support of that process, and the leaders have promised a comprehensive action plan to be announced at the Seoul summit. So it seems to me that things are moving in a very positive way. Let's see where we are in Seoul.
Mr. Lipsky, thank you so much. John Lipsky there of the IMF.